All right, that's better. Good evening, folks. This is Dean here, your passive income coach, and this is take two because I forgot to push record on the previous version. This is a quick video to share with you one of the trading strategies provided by iMarkets Live. Okay, this is called the Harmonic Scanner, and it's done utilizing this particular strategy is done utilizing a computer algorithm, looking for trades on the Forex market and then providing access to those trades for you to get the detail, and then you can trade those in your own personal account. So you can see here, this is my iMarkets Live back office. This is where all the training and education is provided for the Forex market and the crypto market. The IML TV is basically where the company provides real live traders trading their own strategies, and you can actually watch over their shoulder and see what they're doing, view their screen, listen to what they're saying as they're making trades, and learning and educating yourself with real live data happening, at the moment. The web analyzer is another key strategy provided by the company. This is for sort of fast-paced trades. These come in quite regularly. Every 5 to 10 minutes, you've got a new trade coming in, and you're simply just trying to scalp the market, trying to grab a little bit of market movement, a little bit of momentum as it identifies those, and you're trying to grab a little bit of profit on the side. I sort of prefer the Harmonic Scanner. It's a little bit slower paced. It takes a lot longer for these trades to set up. And it's not a hectic, fast-paced trade. I can sort of place a trade now, and it could be a couple of hours before the trade finishes, maybe even a couple of days before the trade finishes. But I've got time to look at it, analyze it, and then place my trade. The swipe trade is probably the most popular strategy. It's the one that most people get started with. These are trades that are basically sent to you via an app on your phone, and you can place those trades wherever you are. Directly onto your phone. So we've had a few people that have joined recently. They've downloaded the app, they've downloaded their account, they've gotten started, they've got the swipe trade sent to them by professional traders in the company. They copy and paste that information across, and bang, they're into the Forex market immediately. Sometimes making money, sometimes not. But generally, the swipe trade performance is around about 55% profitable to 45% losing trades. But overall, the profitable trades are far greater than the losing trades. So you're certainly ahead in the long run. And they're doing quite well over the last few months. And then again, so you can see there's quite a few strategies here for the complete novice. Whilst you're learning about the market, you can actually get started with some of these strategies. And tonight, I'm going to share with you the Harmonic Scanner. I'm really loving it. And let's get into it. All right, so there's my back office because I didn't have my screen shared. So there's the Academy, that IML TV I spoke about, the web analyzer, and the Harmonic Scanner. So let's have a look at that one now. Log in. So the web analyzer, the Harmonic Scanner is actually it's a computer program looking for certain patterns and certain mathematical equations to determine these crazy yellow patterns. Okay, and there's quite a few of them. Now, I'm not going to explain what the patterns are, all that sort of stuff. What I simply want to do is show you how easy it is for a complete novice to get started in the trade. So let me just compress this together a little bit, and let's get rid of this to make it a little bit easier to see. So this particular pattern, it's on the Australian dollar, Japanese yen exchange, currency pair, I should say. All right. And the computer's determined based on these sort of distances, based on mathematical formulas, that there's a trade happening. And you can see that D is being formed right now. So the D is what we're looking for, and we're going to trade off the D pattern. So this pattern is being formed at the moment. All right, it's not ready to trade straight away. It's just simply saying that all the particular distances between these key highs and lows meets the mathematical requirement. Okay, it's all computer generated. I certainly didn't draw the picture. And what we want to do is we want to enter in off this trade, and you can see here that we've got an entry point, take profit points, okay, and a stop loss will be down here at the bottom. Now there is a slight glitch to this. You'll notice that the entry point is actually below our current price. So price has been coming down, and the algorithm says, based on the algorithm, it's going to start to move back up, and these are our profit targets, but our entry point is down here. Okay, so that's not quite right. So that's something they're just trying to tweak at the moment. But that's all right, because I know what these are. We take, where's our little symbol? Again, this is all part of the training that's provided. Okay, we take a retracement. We run a line from there down to here. Oops. All right, and now we have our new lines. So all I'm going to do here, we've got this pattern, okay, and our entry point is actually on here at the 23.6. So we're going to place that trade at 23.6. Our target profit 1, you can see it meets our target profit 1 perfectly at 82.4. There's our target profit 2. All right, and there's our target profit 3. So for this particular trade, all we're simply doing is we go in, we take this particular pair, I'm going to go and do it in a second, and we tell it that there's our entry price eventually. If the market comes up to this price, I want you to take the trade, okay? So we're nowhere near that yet, so we won't be in the trade. We're just simply telling our broker that if the market does what we think it should do, which is slowly make its way up, when it hits this particular point, I want you to enter the trade, okay? And then if we get to this point, I then want you to sell part of my profit. If we get to this point, sell a little bit more for profit. And if we get all the way out of here, sell all of what I've got left for full profit. Okay, that's basically what our trade is. Now, sometimes we could be wrong. Okay, I'm just going to draw a little line in here so we know that that's the entry point. Okay, so that's our entry point here. All right, now sometimes it could come all the way up to here and trigger, and then we're in the market and we've got money in the market, and then it doesn't quite make our profit and it actually starts to turn back down. All right, we're not 100% correct. All right, so we need to put in obviously what we call a stop loss, and we place our stop loss not where the scanner says, because it always gets our entry points and stop loss out. Our stop loss happens to be at point D. All right, so there is our stop. So that will only activate if we actually come in for a buy, okay? So this particular pattern, it's identified a trade. We're good because we're nowhere near our 23 entry point yet, so we've got plenty of time to put our market on. This could take an hour or two before it gets up here, okay? And we enter here, and then the entry will then trigger the 3 take profits and a stop loss, okay? So let's go and do that now. All right, so what we need to do is pick the pair. So this is an Australian dollar, Japanese yen pair. Okay, so there's the Australian dollar, Japanese pen. Yeah, this is what the market currently looks like. Actually, I'll put it on the same size chart. So you recall that we had this sort of yellowish pattern all through here coming down to this particular point, okay? And literally all we're going to do is it's going to ask us for 3 things: our entry point, a take profit point, and our stop loss. Now, I'm only going to enter 1 trade, and I'm simply going to enter it to take profit 2, halfway. All right, so I need the entry point, take profit 2, and my stop loss data. I'm just going to write those down. $82.658 and a stop loss at 81.992. All right, so I've got my figures. Okay, I come across to my chart and I ask it to enter a new trade. Now, this isn't we don't want to enter straight into the market, all right? We want it pending, waiting for the market to come up to our particular location. All right, there's 2 types. I'm not going to go through the types of buys that we can do on the way. This one's going to call a buy stop. Again, the buy stop, buy limits, and sell stop, sell limits, and market execution trades are all part of the training. But I can tell you this is a buy stop. We want it to buy it on the way through. Our entry point was at 82.246. Okay, and our stop loss was at 81.992, and our take profit was at 82.658. Now, the only thing we don't know is how much do we want to risk, okay? So the great thing about, the Forex market is that no matter what account size you play with, whether it's $100, $1,000, or $100,000, we can place the same trades. It's just the amount of money at stake. Okay, that's called our volume. So for me, all right, I'm trading on a $1,000 account. myfxbook.com. So there's a website that allows you to see, based on your account size, based on the size of the risk and all that sort of stuff, so that you can limit your particular risk. And my fast-paced computer, let's go. Log in. Okay, Forex calculator. All right, so I trade obviously in Australian dollars. All right, my account size is $1,000. On this particular harmonic scanner strategy, because the harmonic scanner has a very high degree of success, I'm personally willing to put in a little bit more at risk. Okay, so I'm willing to put in a 3% risk for this. Now I need to know how much gap is there between our entry point and our stop loss if we get it wrong. So if we go back to our scanner, the distance between this line and this line is our risk. Okay, so in terms of pips, which is the price difference between currencies, again, it's in the training, there is 25 pips at risk. Okay, basically the 0.25 minus 0.00, so 82.25 to 81.00 is 25 pips. Okay, so I'll put you in that I'm 25 pips at risk. The currency that we're doing is the AUDJPY. I hit calculate. So out of my $100,000 account, I'm risking $30, and it says that I should put on a trade at 0.098 lot size. That's my volume size. So let's just round that up to 0.1. Okay, so I come back into my trade. All right, and I can make that 0.1 in my volume size. All right, and my entry was 82.246. Okay, place the trade. Now, if I go to place, let's say I do something stupid. Let's say I try and buy, and I put in something at 81. Okay, because obviously I can't buy. Let me get rid of that. 81.246. Okay, so if I try and buy it at 81.246, it just simply say you can't buy it all the way down the bottom, because the market's, you got to buy it at or above the market, okay, on the way up. So the signal basically come back and say, look, it's invalid. Okay, so there is a bit of protection with the system. So if you put something in completely wrong, it will protect you on that. Okay, so I'm looking to buy, when the market gets to 82.246, I'm looking to place that order. I'll protect myself down the bottom. I've got a profit target above it, and I'm in for 0.1 lot size. I place the trade. There's my green line. So these three lines here are exactly the same as this line here. That's my stop loss. That's my green line entry, and that's my red line take profit. They're those three lines you see on the trade. Bang, bang, bang. So nothing's going to happen until this market slowly makes its way up to the green line. Now, if it comes up to about here and then goes down, we never entered the trade. There's no money at risk. We just simply cancel the trade and say, look, it didn't work. All right. If it does come all the way up here and then triggers that, then we are in the market. All right. So we'll move from this particular pending order. Okay. So you can see that these are my pending, haven't happened yet trades. All right. It's waiting to happen. If it happens, it'll then move across into our live trades, and we're making money or losing money as we go. Okay. And then really my goal is just to let the trade flow and do its thing. Okay. If it moves up to about here, then I might protect it and might close in a little bit of profit. So that's just called trade management. Again, that's all provided skill, knowledge, and expertise through the training program. But right now, that's it. All right, so that's that trade done. It's entered. There's no point just sitting here for the next few hours looking at it. So let's go and look for another one. All right. So literally we can just refresh the screen, see if there's any more popped up in that time. No, it's still the same one, AUDJPY. So that's the most recent one. But as you can see, there's still a bit of distance before that trade actually happens. So let's go and have a look at the one that came out before this one. NZDUSD. Okay, so again, the system will draw the pattern for you. We don't really need to know what the pattern is. The computer knows what that is. All right, and you can see, same thing, all right? We've got this pattern. We're formed around the D. We've got some buys that can take us up, and away we go. So again, we could then take this trade. It's on a completely different pair. It's still well within the time range to get in, okay? Let's look at an example. Let's say we looked at one, all right, and we brought up, say, this one, CAD-JPY. And you've just sat down and you bring it up, and it looks like this, okay? This is a trade we did last night. So you can see that when we first look at it, we want to be up near the D. But if you've just sort of brought this one up, it's too late to trade it. You can see it's already past the take profit point number one, right? We want to be getting in up here, okay? Not all the way down here. So this trade is, you've missed it. It's too late. You can see that this particular trade that we're in from yesterday, it's actually doing quite nicely. You know, it's moving in the direction we want it to go to, which is downwards. We want it to go from D to C, all right? And it's doing that. So we just let that trade flow and do its thing. So that's all you have to do, you know, with the harmonic scanner, is just scan for the signaled trades and decide whether or not it's too early, too late to take the trade. So let's go back to the one we just looked at, and I'll run through it again because I'm going to take that trade. I like the 1 hour time frames. All right, so there's our pattern. Okay, X, A, B, C, D. We want the pattern, we want our price to enter in around here and then travel up from the D line all the way up to the C line. That's our particular goal. I'm going to do exactly the same thing. I'm going to redefine what our entry and stop loss points are, and then aim for a TP2 take profit. How do I do that? I use the tools provided. This is called a Fibonacci retracement. I use those tools provided. D. Try that again. Okay. So you can see here that it's probably not very clear, but that 38 line is not quite in line with our TP1, and that line up is not quite in line. That just simply means that I haven't got the Fibonacci retracement exactly on the right numbers. So I'm not going to worry about that, you know, for the video. But ideally, you want that the 38 line to be right through your TP1, and you want your the 61 line to be right through your TP2. You can see up here the top number's fine. It goes right through the middle of your TP3. That's perfect. So it's just down here. It hasn't connected onto the right spot. It doesn't matter. Near enough's good enough for this example. So I'm going to write down, this is our entry point at 23. This is our stop loss, and I'm aiming for TP2 at this particular price, and I'll read it off this one. So let me just write those down. My entry is at 0.67702. My stop loss is down the bottom at D. Okay, now D will actually be the low of that blue candle. 0.67487. And my target profit is right there. 0.68018. Okay, so we've got that data all provided from the web analyzer, from the harmonic scanner on the web. I take those data, I go and look at NZDUSD, find the chart, Okay, there's our NZDUSD. You can see it's starting to build some momentum to the upside. All right, we're going to try and capture that momentum right up through there. The reason we wait for that 23% retracement is simply because it's gaining momentum to the upside. All right, that would be basically what we're looking at. All right, so that would be the C to D line from our color picture. That's C there to D, and you can see there's our 23.6. There's our entry point, and as we're gaining momentum past that entry point, we're trying to grab it either onto the 38 or to the 61, and I'm aiming for the 61. Get a little bit greedy and see if we can get it all the way there. And you can see it's moving its way slowly up towards 23. How do we enter the trade? Again, we bring up a new trade. Let's go and check how much our lot size can be. All right, so this time, again, I'm willing to risk 3%. What's our pip difference? So I'm going to give the guys online, you don't know what the numbers are. Where's the trade? So, Bronwyn and Chris, you've done a few trades before, so you should be able to work out what the potential risk is between 0.67702 and 0.67501. All right, and so it's 20 pips. We dropped the last number, and the distance between 6770 and 6750, that's 20. Okay, so that's our risk, 20 pips. Our currency is NZDUSD. This is why I like the harmonic scanner, right? I'm not stressed about trying to work everything out. All right, you can see our lot size here can be slightly bigger at 0.11. All right, but I'm just going to round it to 0.1. All right, so we bring in our trade. We do a 0.1 trade. Again, this particular trade is a buy stop. And our price was 0.67702. Our stop loss is at 0.67487. And our take profit is at 0.68018. Place to trade. Okay, again, there's our lines. All right, there's our entry. All right, obviously that isn't point C. I lied. Because if it was point C, those numbers would line right up. Okay, so that's probably a little bit closer to where we're at. All right, so there's our stop loss. There's our entry. All right, if we can modify that down to, oh no, I won't. All right, but you can see that the target profit's online. So look, that's how simple it is to use the harmonic scanner. I've got 2 trades placed within 10 minutes. I didn't have to find the trades; they were found by an algorithm, and all I have to do is just copy the data across, put it into the system, and now the system will now manage and control my trade for me. In terms of potential profit on my $1,000 account, if we were to go all the way to the top and hit our target, that is a total of 30. It's 30 pips profit for 20 pips risk. So we're risking. What are we risking? We're risking about $30. So I would say we're looking for a profit of about $40 for a $30 risk. Okay, and we can manage that through the way. For the other trade, the Japanese yen we put on, we had 25 points at risk, and we've got nearly 50 pips profit potential. Okay, so that's a 2-to-1. All right, so we had $30 at risk for a $60 profit. Okay, and we let those trades go. Come back tomorrow, do it all again. So that's it. Look, so that's the harmonic scanner. I personally, I prefer the 1 hour time chart simply because I think we get better setups and they just seem to be more successful in their outcomes. What we can quickly do is just have a look at some of the history, because obviously, as you can see, they build the history, that this picture stays. So let's just have a look at how some of the others have gone. So let's go back a little bit, because some of these other ones may not have triggered. So again, so this one, you know, again, we could take this particular trade. We're still sitting down at point D on a 4 hourly chart. So the bigger the time frame, the better. This will have some really big potential because the time frames are bigger. So that's AUDUSD. I might go back and put that one on too. Let's look at, that's another 4 hour chart. So that's probably new as well. Yeah. So you can see like there's plenty of, you know, when you come home from work, there's plenty of patterns to go and look for. Let's go to the 1 hour time frame though. GPB CAD on an hourly, that should be well into the trade. Here we go. All right, so that trade was put on about 4 hours ago. There's your D. Okay, let's just draw in that little fib to see where our 23% was. Okay, so you can see, oops. So you can see that the entry point was in here. Okay, you would have entered, and we've already passed TP2. Okay, so there's our 61 retracement. So that would have been a very, very nice, quick, profitable trade. Each one of these candles is an hour. So, you know, within 4 hours, you've put the trade on, you've triggered it, and you've made, what do we got? We got 70.26 to 70.41, up here 70.48. So about 22 pip profit in about 3 hours. Okay, not too bad. GPB CAD. Oh, this is one we looked at last night. My wife and I were looking at that one last night. Or is that the one we just looked at? That looks like the one we just looked at. CAD JPY. Right, this is the one my wife learnt on last night. So again, we draw a fib retracement from C to D. Okay, so you can see we entered in here, right, multiple times. So if you had to come home and the market had come down here and it sort of was hovering around your 23, there's another opportunity for you to jump in because 23 is the entry. So you can see how it hovered around the entry for a little while, and now it's moved all its way down to halfway between TP1 and TP2. And, you know, we would still expect that trade to sort of go all the way down to the TP2, take some profit. And if you were inclined, you could take a little bit of profit and then allow it to go all the way down to TP3. But that's looking like a very successful trade there. And that was about this time last night. This was the one I was teaching my wife on. What's next? CAD, JPY. Let's just go down even longer. So let's see some of these got some really, really good history. Okay, so this pattern was formed back on the 31st of July. So what was that? Tuesday? Tuesday, I think it was. So it was formed back on Tuesday. The pattern was, again, let's run that little line from C to D. Okay, and we'd be getting in at the 23. All right. So, you know, it finished, and literally within the next hour, it triggered into the trade. It went against you for a little while, so you've been a little bit of loss, but obviously as long as it doesn't get up to this level, you're not going to be too much of a loss. And then look at that, literally within 1, 2, 3, 4 hours, it hit TP2, 5, 6, 7, 8. By the time you got up in the morning, it would have hit TP3 if you're in the trade for the whole range. Okay, bang, there's a perfect example of what the harmonic scanner is about, and then bounced off that and triggered in. And now it's just looking for its next potential. And look, literally you can scan through these and you'll just find example after example after example after example of these things just, you know, hitting certain targets. All right, there's another one. You know, I didn't even have to draw the line, and you can see that it went all the way up to TP3. All right, so this is why I love the harmonic scanner. You know, I don't have to spend all my time looking for the trade. I simply come home, I find a couple of trades, I put the trade on, I sit back, and I have confidence that about 80% of the time they're going to get it right. And that's why I aim for the TP2 because obviously we're putting in twice the reward that we get for the risk. So if I'm only wrong 2 times and I'm right 8 times, and every time I'm right, I'm double the size of the amount that I would have lost. That's like a 16-to-1 return reward on that. So that's why I like that particular strategy. So look, I hope that was helpful. I'm going to end the recording. Actually, no, I won't. I'll ask these guys, you got any questions? So if you guys that are watching the video and learning at the same time, if you guys got any questions, is there something I didn't cover or something that wasn't clear? Because if you've got the questions, then the guys watching the recording probably have the same questions. And look at that. This is just triggered on TP3. You know, if I had been in that trade all the way. Now, that's a 4-hour chart. So that's 4, 8, 12, 16, 20, 24. That's a day. 4, 8, 12, 16, 20, 24. There's another day. 4, 8, 12. So 2.5 days it's taken, but it's got you all the way to TP3 and a good chunk of pips. So Dean, Chris has left us. Bronwyn, you got any questions? Something I didn't cover, or something a little bit confusing? Maybe I can explain it in a different way. Don't forget to come off mute if you're going to ask a question.
I think that's okay. I think when I do the actual, you know, like the training, I'll understand where to go to see where the hour is and all that sort of stuff. You know, whereabouts do you see, like it's a 4-hour trade or a 1 hour? You know what I mean?
Yep. So there's a couple of places you can see that. The first one is when you're actually scanning, you can scan either for 15-minute trades, or you can scan for and they're grouped together, hourly trades, 4-hour trades, or daily trades. And then when you do the drop-down menu, it tells you H1 means 1 hour, H4 means 4 hour. The other place you can see it, get off here, come on, close. What are we on? GPB, NZD, 4 hour. GPB, NZD, the other place you can see it is up here. It says it's on a 4-hour chart, okay, as opposed to 15-minute, 1 hour. All right, and it also says it here, H4.
Okay, good.
You know how to look at the different time frames in your Pepperstone account?
Probably would if I went in there.
So on your trading account, 1 minute chart, 5 minute chart, 15-minute chart. So obviously the longer the time frame, the less radical the movement. Okay. So that's you know, that's a 1 hour chart there.
Okay. That looks good.
All right.
Do a bit of practice.
Yeah, so it's a bit of practice, but anything on the 1 hour or the 4 hour, you know, the time of the chart itself doesn't really matter, because the only ones I would watch out is the 15-minute chart. The very first one we did tonight was on a 15-minute chart. It just means that the price action just happens to move a lot quicker, and there's less reliability in it. You really want the ones that take a long time to sort of pan out, because there's less volatility in the longer time frames. That's all.
And it's great because there's so many videos to watch all this sort of thing and learn. And
yeah, well, again, so you don't need to know any knowledge of how the Forex market works to understand how to come onto the website whilst you're learning. You know, put a trade on and then go and watch 2 videos of information, and then come back to your trade and see that, you know, you're getting closer and closer to the trade, or you might be in the trade now, and then, you know, you're building your account slowly whilst you're still learning. And I know for you, you know, you're building a demo account, but even though it's a demonstration account, you know, you're still learning the skill to you know, to enter the trade, manage the trade. You know, you learn how to move stop losses tonight, all that sort of stuff. It's all valuable skills, because when you're in for real money and your emotions are, you know, are tied to the fact that you could actually lose, you don't want to be thinking, oh, how do I move a stop loss? You want that to be second nature. So that, again, that's what I loved about this, is you can practice on your demo account, get the skill, get confidence. So when you're trading with real money, you know, some of those are behind you.
Yeah, that's right. And you can go over and over and over the videos all the time, so until you get it right.
Yeah, exactly. So there's that 15-minute, was that the one we put on, the GPB, JPY? I don't even remember what we put on.
Yeah, the shark, yeah.
Was that it?
Yeah, I'm pretty sure.
Pending trade.
I've got so many now.
Yeah, I know, right?
It's
AUDJPY is what we put on. So you can see there's been a new trade come out in the 15-minute time frame, because that's the latest one. So we would have to go into and find in the 15-minute ones, AUDJPY. So there it is there. All right, so this is the one that we put on about, you know, right at the start of the video, and you can see it's slowly starting to move its way up, okay? And if we look at the actual Pepperstone account where we've got lines in it, AUDJPY, right, you can see that we're still waiting for it to get up to the green line. So, you know, goodness, on this rate, and that's each one of these is 15 minutes, you know, it's 15, 45, an hour and 45, then I'll do a little bit of down, then I'll go back up. Like it could literally, this might not happen until midnight. But I don't have to worry about it. You know, it's set and forget. That's what I love.
Yeah, me too.
Any other questions? Dean, what about you? I know you've never seen trading before at all. If you see some background, then you might not be able to hear with your headset. You've got a TV on.
Yeah, I've got the TV on. The guy's watching a bit of telly.
Yeah, right, okay.
Yeah, I probably might just squirrel over to Bronwyn's place one day and sit down and have a little chat about it. All of these little blue and red lines, don't know what they are. What are they, time frames or buys?
Okay, yeah, good question. Right, so let me just zoom in a little bit so we can see them a little bit clearer. So each one of these particular lines, so the blue and the red ones, they're units of price movement within a certain time frame. So our particular time frame is 15 minutes. Let's get off one that doesn't have all the yellow and everything. Now, I might just mute you
Sure.
whilst I answer your questions. Yeah, that's better. Okay. So AUDJPY. Come on. So yeah, so as I was saying, so each one of those, what we call a candle, is made up of a time frame. In our particular example, we're using 15-minute time frame. All right, so the price moves, fluctuates constantly, and inside that 15 minutes, it tells us what range of price that was on. So this particular example, we're not in a one. Let's get into a. How do I change the chart? Here we go. So this particular example is in 1 hour. Okay, so this candle here represents the time movement between 11 and 12 on this chart. All right, and my chart's based on Athens time. I won't get into why, but it just is. So what actually happened during this time is the price went up and down, up and down, up and down, up and down, up and down within that particular candle. Okay, now if we break the 1 hour down, say into 15 minutes, and we look between 11 o'clock and 12 o'clock, we should expect to see 4 candles. Okay, so between 11 and 12, there's the 11:45. What are we looking at? Between 11 and 12, right? So let me just go back to the one.
Why are some bigger than the others?
Okay, yeah, I'm just about to explain that. So this one's between 11 and 12. So what happened between 11 a.m. and 12 a.m.? All right, if we go back into down to the 15-minute time frame, so where's the 11? There's the 11 time frame. So it did very little price movement. So it simply went from there to there. That's it. It just bounced between that, like basically a cent, maybe 2 cents in price. Then from here to here, just a cent in price. And from here to here, a cent in price. And in here, it actually did a big price movement. Now that big price movement could have been a corporation that's come in, and exchanged $4.5 billion worth of Australian yen, or it could be, the Japanese government finalising a trade deal with an Australian bank, and they're these price movements are the world fluctuations in price. Okay, does that make sense? So that's why sometimes you get really big ones. And then in the hourly chart, basically we're compressing. I need a square. We're basically compressing. What's going on?
And the color?
Yeah, good question. So we're compressing those 4 time frames. Okay, that 1, 2, 3, 4. We compress that together, and that becomes an hour. White simply means it went down for the period. So it started up here and went down here. Blue means it went up for the period. So it started down here and went up there. Okay. So I can quickly look at a chart, especially on, say, like an hourly chart. Again, this was part of the training package. I can quickly look at this and look, it went up, it came down, it went up, it sort of broke even, it went up, it broke even, it came up, it went up. So that's what the color differences allow you to quickly look at, is inside that time frame, what was happening. What was the bias? Were there more sellers in the market, or were there more buyers in the market?
Complicated, which means I have no idea what's going on.
Okay.
Yeah, so that's all part of the training. I'd recommend, jump over with Bronwyn. Bronwyn's doing some swipe trades right now. That's how she's cutting her teeth, is on this swipe trade. So that's where they're actually sent to her via an app. She doesn't even have to log on. But the next step for her is to start moving into the harmonic scanner. Coming home,
Yep.
an evening, having a look at what some of these trades are. And then, now that she can see how easy it is to sort of put that in, we might need to do it a couple of times. Put that sort of measurement in. Just for you, Bronwyn, if you haven't taken notes yet, take a fib retracement, draw it from C. Take the fib retracement and draw it from C to D. Okay, and we enter at 23. It's a nice little catchy saying, right? Draw a fib retracement from C to D, enter at 23. The rest of the take profit points are exactly the same. So there's still TP1, TP2, TP3. It doesn't change. All right, and our stop loss is at D. Write that down. All right, so I'm going to finish. There's no more questions. Dean, Bronwyn, anything else? No, you're good?
All good.
Okay, thanks, Matt. Look, thank you very much for your time, guys. And for those watching the recording, look, I hope that was useful. As you can see, it's a relatively simple strategy where you don't need a lot of knowledge about the market itself. If you can simply come over here, click on a fib retracement, draw it from C to D, and then write down 3 numbers, your entry point, your stop loss, and your take profit. And you can choose to take profit. It's up to you. You can just simply take a small take profit. This will hit nearly 90% of the time. This hits around about 75 to 80% of the time. This hits about 60% of the time, 50 to 60% of the time. So the risk to hitting the rewards, it's your control. Okay, but as I said, this is something very, very simple that anybody can get started with and start making money on it. I hope that video was useful. If you've got any questions, leave a comment down in the comment section, and we'll try and get that answered for you. If you'd like more information about iMarkets Live, or maybe you want to look at how this could become part of a passive income program for you, and you want to learn about the Forex market, or you want to learn about how to trade the crypto market, then look, hit me up, send me some information. I can send you a link, and you can have a look at it a little bit more in detail, and we can talk about how much it costs to be involved. To get involved with the program, you're looking at around about $300 for a one-time payment as a joining membership, and then it's $150 a month subscription to have access to all the education training and access to all the web analyzer, harmonic scanner, and swipe trades as part of your particular package. A point to note, I've had this question before, so I think it's really important to point out, is you do not make or you do not provide any money to iMarkets Live. They do not make any commission from anything that you trade. You keep control of your money. You keep control of your account. You do that with the professional licensed Forex broker here in Australia that you trade through their particular platform. iMarkets Live is just an education and information platform, and as part of that subscription, they have some live traders that actually send out their trades to help you get started and help you make money. So for some of us that we've been involved in different investment strategies, we've always had to give our money away. We're reliant on them to make the money, and then we're relying on them for them to give it back to us, and in some cases that hasn't happened. So that's why I've gone down this particular path. I want to keep control of my money. I don't want to give my hard-earned dollars over to somebody else and then hope they give it back to me. And what Forex education also provides for you is a skill and knowledge that no matter what happens in the future, if I lose a job, I lose an income source, whatever the case may be, I know that I can make money in the Forex market by following the strategies, following the education system, and I now have a skill for life that I'm currently training my wife and my kids on, so they'll always have an income source that they're in control for. And to me, this has been a big game changer over the last 4 to 6 weeks to finally feel like I've got some sort of financial control over my future. I would highly recommend this particular education platform to you. And as we said tonight, you know, Harmonic Scanner is just one of the simple tools that they provide as part of your package to help you get started. So if you've got any questions, let me know. If you'd like some more information, hit me up down below and I'll get that too. Have a fantastic week, and whatever you're doing out there, you know, enjoy yourself. And, you know, for all of you, I hope you find financial freedom as quickly as you can, because you were born to be financially free. So take care and have a great week. Thanks very much.